Good morning. Welcome back to Miss Finance, or welcome to Miss Finance if this is your first time. It's currently 5:30 a.m. and I have my trusty coffee right next to me. And I thought, what better time to speak about self-employed expenses than first thing in the morning? So here we are. Now, all I ask in response for this free advice is for you to hit that like button, and if you're feeling extra generous, then to hit that subscribe button also. I'd be very grateful. So let's get right into it. So a disclaimer as always of this information. This is not legal advice. This is not tax advice. Okay, now there are various expenses that you can claim, and we're going to speak about those in a little bit of detail. So just as an overview, these are the things like office, property and equipment, car, van and travel expenses, clothing expenses, staff expenses, reselling goods, legal and financial costs, marketing, entertainment and subscriptions, and training courses. So just so you're aware, the way that it works is that HMRC lay out a few expenses that are what they call allowable and some that are disallowable. So what you do is you take your turnover in the year and say that's 100k, and say you've had, just for argument's sake, 50k of what they call expenses in the year. When you look at that, your profit is going to be 50k. Now, they then take that, and then from it, there might be those disallowable costs in there. So if you do have disallowable costs that they don't allow you to claim, then you've got to then add them back into that profit. Let's talk about what those are. So firstly, we have office, property and equipment. Now, these are items on things that you'd normally use for less than 2 years. So it's the likes of stationery, rent, rates, power and insurance costs. So in terms of stationery, these are things like your phone, your mobile, fax and internet bills, any postage, stationery, printer ink and cartridges, computer software for businesses that are going to be used for less than 2 years. Notice the importance of these less than 2 years. The reason for that is because if it's more than 2 years, then there might be capital allowances that you can use, but I'll go into capital allowances in detail on another video because it can be quite complicated if it's the first time you've come across it. So there's also computer software in your business where you make regular payments to renew the license, and in that case alone, even if that's for more than 2 years, you can continue to have that as an allowable deduction. Now, there's also rent, rates, power and insurance costs. You can claim expenses for the rent for business premises, business and water rates, utility bills, property insurance, security and using your home as an office. Now again, a small caveat here, the use of home as an office can only be deducted for the parts that's related to your business. But again, I'll go into that on another video because there's 2 different ways that you can account for that. So let's leave that for now. Just be aware of it. And we'll move on. So you can claim expenses for repairs and maintenance of business premises and equipment. And for alterations to install or replace equipment, you can claim allowable expenses or capital allowance. And again, that depends on if you're using the cash accounting method or the accruals accounting method. Again, I will talk about the accruals accounting method and the cash basis accounting method in another video for you in detail, just so you can wrap your head around that. Now, what you can't claim for is expenses or allowances for the buying of building premises. If we look at car, van and travel expenses, now the things that you can claim for are the likes of vehicle insurance, and even if you've got more than one in the business, repairs and servicing, so MOTs, things like that, fuel, parking, hire charges, vehicle license fees, breakdown cover, train, bus, air and taxi fares, hotel rooms and meals on overnight business trips. What you can't claim for are non-business driving or travel costs, fines, travel between home and work. And that's because if you were allowed to claim all costs for the travel between home and work, every man and his dog would be doing that. So I'd be claiming my travel costs to work every day. Wouldn't that be great? Clothing and expenses. So this is a really easy one. So you can claim allowable business expenses for uniforms, protective clothing needed for your work, and costumes for actors or entertainers. Now, what you cannot claim for is everyday clothing, and that's even if you wear that everyday clothing at work, you cannot claim for that. So moving on to staff expenses. So what you can claim for here is employee and staff salaries, bonuses, pensions, benefits, agency fees, subcontractors, employers' national insurance, and training courses that are related to your business. What you cannot claim for is for carers or domestic help, i.e. the likes of nannies, the likes of babysitters. reselling goods. So what you can claim for is goods for resale, so stock that you're buying in order to resell to a customer. Raw materials, so the likes of iron, any kind of woods, that sort of thing. And then direct costs from producing goods. What you cannot claim for is any goods or materials that you're buying for your business that you're then going to use yourself. So they call that private use. So if you're doing that, you can't claim any of those costs back. So they have to be added on to the taxable profit. And what you also cannot claim for is depreciation of equipment. So again, you take your 50k and say if your depreciation for the year has been 10k, which is pretty damn high, but we'll go with it anyway. Then your taxable profit is now 60k. When I'm saying taxable profit, I mean the number that you're arriving at that is now taxable. It's what you're going to use to calculate the tax that is due. Right, legal and financial costs. So anything like accountancy fees, bookkeeping fees, legal and other professional fees, they can all count as allowable business expenses. So you can also account for surveyors and architects for business reasons, professional indemnity insurance premiums. But what you cannot claim for is any legal costs of buying property and machinery. And if you use traditional accounting, then you can claim for those costs as capital allowances. And you cannot claim for fines for breaking the law. What you also can claim for is bank, credit card and other financial charges. So things like bank overdraft credit card charges of any kind, interest on bank and business loans, hire purchase interest, leasing payments and alternative finance payments, for example, like Islamic finance. So marketing, entertaining and subscriptions. So what you can claim for is advertising in newspapers or directories, bulk mail advertising, free samples, website costs. But what you cannot claim for is entertaining clients, suppliers and customers and event hospitality. So you can also claim the likes of trade and professional journals, trade body or professional organisation membership if related to your business. Now, what you cannot claim for is payments to political parties, gym membership fees and donations to charity. Now, you can claim allowable business expenses for training that helps to improve the skills and knowledge you use in your business, such as refresher courses. And the training course must be related to your business, so you can't just go out and do any willy-nilly training course that you want. Now, you cannot claim for training courses that help you start a new business or expand into new areas of business, including anything that is actually related to your current business. A few savvy tips for you here. Make sure that you keep very good records. Almost divide them into the areas that I've spoken about today. If you're using a bookkeeper or an accountant or even doing this yourself, come year end when everything needs doing yesterday, you've got everything there ready to go. And if you've got any questions about any grey areas, then you've got those ready to go too. So you can get your return and your taxable profits worked out quite quickly. And another thing that you might not be aware of is that HMRC won't ask for proof of expenses when you submit your tax return. They won't ask for it then. But they then have 7 years to come back to you and investigate you and ask for proof of receipt. So it's absolutely key that you make sure that your records are accurate. Just as an additional tip, I'm just going to go through some key dates for you where you are self-employed. Now, if you're newly self-employed in the year, you have to register with HMRC, and the latest that you can register with them is by the 5th of October, after the end of the tax year during which you became self-employed. So say if you started your business in June 2019, the end of the tax year there would be the 5th of April 2020. So you would need to register with HMRC by the 6th of October 2020. So the tax year runs from the 6th of April to the 5th of April every year. Say in July you've just become self-employed. The tax year will end on the 5th of April 2021. So you need to make sure that you're registered with HMRC by the 5th of October 2021. So when do you actually need to file your tax return? That's another question that gets asked a lot. So whilst the tax year end is 5th of April 2020 this year, you will then file your tax return on the 31st of January 2021. So if we use the example from before, if you've started self-employment in July, so say if I start today, I have all the way to October 2021 to tell HMRC that I'm self-employed, and my first tax return that would be due would actually be the 31st of January 2022. And this is also when the first payment on accounts for that tax year would have been due. 2022. Now, just a quick side note, I know we're talking about tax a lot here, but if you're newly self-employed, make sure that you register with HMRC for tax and national insurance. Another note, if you stop trading during the tax year, you still need to complete a tax return for your year of business. The second payment on account for the tax year end, the previous 5th of April, is due on 31st of July. So for example, the second payment on account for the 2020 to 21 tax year would be the 31st of July 2021. For 2019 to 20 tax year, as in the 5th of April 2020, the second payment on account is due on the 31st of July 2020. However, some good news there. If you're due a payment to be made on the 31st of July 2020, because of all the crisis that's going on, they've actually delayed that to the 31st of January 2021. They're not going to stop you if you want to pay it on the 31st of July, but you know, cash is king. I hope you found all of this useful. If you've got any comments or questions, please do put them in the comments box below. Otherwise, thank you for watching, and I'll see you on the next episode.